There are people, Cern Basher, in the town, in the city, in the country, in the world, who believe that we're having an AI bubble and that Nvidia's stock is it's in a terrible place. We can't imagine how low it might go. It sound familiar?
Yes.
Yes, like every day. This is new for Nvidia, not so new for Tesla holders, stockholders, or hodlers. Yeah.
Well, given a long enough time frame, Randy, everything's a bubble.
There you go. That's true.
In Nvidia's case, it might take, 50 years to play out, but yeah.
There's a similar saying about disease. It actually all started around diabetes, and people are like, "Oh, I got diabetes." So if you live long enough, everybody gets diabetes.
Hmm.
Yeah, it's just
That's a great thought.
so if Nvidia lives long enough, it will collapse into. I mean, we saw Sears collapse. We saw J.C. Penney's is on, barely hanging in there. Kmart. I mean, I can think of
South Sea Company.
yeah.
Yeah, they all collapse eventually.
Yes, yes. Well, do you think NVIDIA is going to be collapsing anytime soon? I believe that you've put together a comprehensive analysis.
Well, you tell me what you think after the presentation and
All
see
right.
if I've persuaded you, because I know you're in the bubble camp.
No, well, no.
Sorry, I was trying to push you in a corner there.
Well, we'll see. We'll see. I'm sure that I'll have some arguments along the way, but we'll see. We'll see if you can convince me.
Speaking of in a corner, Randy, what's that over your left shoulder?
You mean over here,
Yeah,
the book, and then the Optimus. You have one of those as well, I believe. One of
I
the
have three.
you have,
Mine are partying right now.
they're partying. Are they celebrating after their Thanksgiving meal, or what's going on?
I think so.
Okay.
Yeah. I've never actually seen them work, but I think one day they will.
Oh yeah, yeah. That's good. I like it. I like it. Yeah, yeah.
One day.
One day soon, hopefully.
Right. Well, let's talk about a little company that you may have not heard about.
Yeah.
It happens to be the largest company in the world,
Yeah, yeah.
but you could easily have missed this. So let's dig into it a little bit and see what we think. So the usual disclaimer that none of this is investment advice. And the reason is I don't know who we're talking to online here,
Yeah.
and I don't know their situation, so I can't give investment advice.
By the way, I'm not a holder of any NVIDIA stock. Are you a holder of any NVIDIA stock?
Yes.
Okay.
Yeah. Okay. This is a chart, a little cartoon that I actually had commissioned years ago
Wow.
from a cartoonist, Des Campbell in the UK.
Hmm.
So I actually own this image, but I added the logos to it a couple of years ago.
Okay.
Um, and so NVIDIA was this, massive shift that the other dinosaurs maybe didn't quite realize. Although it turns out these dinosaurs are, the main customers for NVIDIA.
Yeah, yeah, yeah.
Now we've got the little Tesla chicken there sitting on an egg. Tesla recognized what was happening, and it was just kind of incubating its own opportunity. So anyway, that was
Yeah,
fun.
that's fun. That is fun.
All right, here's a snapshot of NVIDIA's third quarter income statement, courtesy of App Economy Insights. They do a nice job with these charts, these diagrams.
Okay.
So you can see there that black vertical bar in the middle. That's their total revenue in the quarter is 57 billion,
Right.
and it was up a mere 62% year over year. So pretty strong growth for such a massive amount of revenue.
Yeah.
And what's cool about this is you can see what makes that up there on the left. Data center, 51.2 billion,
Mm.
and then some other businesses.
Hmm.
Now, Nvidia was not unlike Amazon was for a period of time. Amazon being a book company.
Right.
Amazon never stopped being a book company, but like Nvidia never stopped being a gaming company. But other things now have become larger,
Right.
principally data center. And they've got a few other little businesses too that, not doing too bad. Professional visualizations up 56%, automotive up 32, and OEM and other up 79%. But those are pretty tiny slivers of businesses at this point. Now, just to the right of that black bar is then if you break down revenue into the cost of revenue, 15 billion, and gross margin, 41 billion. So pretty amazing, right? That 73% of their revenue is gross profit. Pretty incredible.
Pretty incredible, especially again for a company this large.
Especially for a company this large. And then you look at the other expenses, like operating expenses, a mere 5-6 billion. It leaves operating profit of 36 billion.
Yeah.
63% margin. And then net profit of almost 32 billion, which is a 56% net margin, which is astonishing. Astonishing.
Astonishing. Truly astonishing.
Yeah, I'll say that again.
And the and the rub, or one of the reasons why people are calling it a boom, is that usually if you're getting these kind of margins, somebody goes, I'm going to do that. Yeah.
Yeah. And we do have some players that think that, and we'll cross that in just a second. Before we get there, let's take a look at, again, the revenue growth. You can see the data center business was smaller than gaming there in Q4 fiscal year 2021.
Yeah.
1.9 billion versus 2.5. And the gaming business has not quite doubled in this time period, but the data center business has gone from 2 billion to 51 billion. And not showing any sign of slowing down just yet.
There's maybe you're going to talk about this, but you're probably not. But anyway, maybe you are. This is not just a story about making a quality product that everybody wants, but it's also a story about being able to produce it in massive amounts.
And what's amazing for NVIDIA is that they don't make it themselves.
Right.
So unlike Tesla, they farm out the construction, the build out of their products,
right?
Particularly semiconductors, TSMC.
Largely,
they work with a massive convoluted supply network of probably thousands of companies.
Yeah.
These NVIDIA supercomputers are probably one of the most complex products ever built. There's a few others I think that could rival this, but it's up there. To your earlier point about competition, because the margins are so high,
right?
We have a little company called AMD, and they had revenue of about 9.2 billion in the quarter, and it was up 36% year over year. So not nearly the growth that we've seen with NVIDIA,
right?
And you can see their data center business now too is the largest, although they still have other businesses that are pretty sizable. The data center business only grew 22% year over year. And their gross profit, instead of in the 70s, it's only 52% margin. And their net profit, instead of 56% for NVIDIA, is only 13% for AMD.
Wow.
So, there's an opportunity here for them, obviously, to continue to grow this data center business and continue to improve the profitability of the company. Absolutely. But right now, it's a distant second place to NVIDIA.
So, and again, making the analogy with, in this particular case, let's say Optimus or Robotaxi, I expect these kinds of competitors that'll do okay for Optimus and Robotaxi. There'll be companies that do fine, that make maybe even billions in revenue or billions in profit.
Yeah, I mean, a company that makes 1.2 billion in profit, per quarter is a good little company.
Good little company,
right? And that's great.
Yes.
Yep. Okay, so back to NVIDIA. This is a chart I put together just to give some perspective to the staggering amount of growth that NVIDIA's had in a short period of time. And I've always said that NVIDIA is a nice precursor to what is likely to happen with Tesla. Okay. So if we start back in Q4 of calendar year 2019, so this is right before the pandemic hit. NVIDIA's quarterly revenue in that quarter was 3.1 billion.
Okay.
And you can see gaming there, almost 1.5 billion, and the data center business was almost $1 billion. Right. So the second largest business. And again, Jensen was telling us that the AI business was about to boom. And some believed him, some didn't. The stock, certainly prior to this period, sold off here on weakness because the gaming revenues had gone down.
Right.
And then also, too, during this pandemic period, the gaming business had done really well and
Yeah.
sold off.
Yeah.
And again, Jensen was telling us that the AI business was going to boom, and no one really listened. And all of a sudden, it went straight up.
Yeah. Yeah.
So the revenue for the total revenue for the company has basically 18.4x'd
Mm.
since this red bar.
Mm.
Okay, as of the last quarter, 57 billion. So remember that number, revenue 18, call it 18x'd.
Okay. All right.
Okay.
Mm-hmm.
All right. Here's some company guidance for future revenues. Nvidia is very kind to its analysts and basically spoon feeds them the information.
Mm-hmm.
And so for Q3, they had given guidance of 54 billion plus or minus 2%, and they produced 57. And there was similar kind of guidance for all these other quarters.
Yeah. Which
So
they handily, yes.
they give you guidance and then they beat it by 2 or 3 billion. So now the next guidance for this next quarter that we're in now is 65 billion. So they'll probably get 67, 68 billion in revenue, which is, you can see the growth here just visually. It's incredible.
Yeah.
Okay. Now, certainly there's other companies out there with more revenue per quarter than NVIDIA is generating,
A few.
but not the growth that NVIDIA is having. That's what makes them quite.
There's only a very few. With more
Only very few.
Yeah, right.
Yeah, less and less all the time.
Right. Amazon and
Walmart.
Walmart. Yeah, those are the two that come to mind right away.
Yeah, maybe some of the oil companies.
Yeah.
Our friend AJ does a nice job of making some longer term projections.
Mm-hmm.
And so he's got 67 billion here for this quarter that ends at the end of January.
Mm-hmm.
Again, company guidance is 65 billion.
Right.
And you can see he's playing this out over the next 3 years.
Mm.
And by January of 2029, call it fourth quarter of 28, 208 billion in the quarter.
that could at least get close to, or if not pass, Amazon and Walmart.
Yeah.
Because they're up in that range.
Yeah. So this is the kind of growth expectation that, that AJ has and other analysts would have similar projections, I think, for the company.
For sure.
Okay.
And they might be light.
Might be. Might very well be light. And by the way, this revenue projection for NVIDIA includes no revenue from China.
Right.
Which about 10 billion of which was taken away there in not last quarter, but the quarter before.
Right.
So if that is allowed again, then there's a significant opportunity to sell there.
Mm-hmm.
Okay. All right. 18x increase in revenue. How much do you think operating income grew over the same time period, Randy?
Well, I'm going to say more. I'll just go for 25x.
36.
36. Double.
Now, the amazing thing about this is if we look at Elon's compensation plan for Tesla, in the last 12 months, Tesla has earned about 11 billion in EBITDA.
Mm-hmm.
The highest operational guideline in Elon's plan is for 400 billion. It's a 36x increase in EBITDA.
Over about that same time.
Over about the same period of time. And in fact, functionally, this happened quicker because I could have put this red bar, here where it was even lower.
Right. True.
And it would be even higher. But
yeah.
For Tesla, it could happen over, similarly short period of time.
Right. Right.
Possible. Yeah. So for people that say that's crazy that, you can't 36x operating income for a company this size, well, here's Exhibit A.
Yeah. Yeah.
Right. So it's pretty amazing. So operating income for the last quarter was over $35 billion. Pretty staggering.
Indeed.
Right. So I could see why people might look at this chart and say, that looks kind of bubblicious to me, that can't be sustained. Right. If you just look at these numbers and don't really consider what the underlying situation is.
Sure.
Okay. Now, back to margins, profit margins here in blue. In the mid 70s, have been close to 80 at one point. And then what's amazing is the net margins above 50.
Right.
Again, this period here was kind of the post-pandemic period when the gaming business suffered and margins came down. And then as the spending on AI really ramped up, net margins went up and hit a new level into the 50s.
Right.
And this is that quarter where the China revenue was written off, or the China portion of the business anyway.
Sure.
So one of the questions remains is how high or how long can these margins stay at these elevated levels? Again, AJ gives us some thoughts on that, and he's got it kind of trailing off very gradually over the next few years down to, from 75 to 73%, which is right where we were this last quarter. So basically holding flat. Okay. And he's got explanations here as to why we had these dips. This one was one-off drop in supply challenges, a golden moment for investors, he says. And then here was the write-off of the H20 ban, the ban in China, write-off of $4.5 billion of inventory. Okay. All right. Operating cash flow. So Nvidia is not only making money in terms of profit from a cash perspective, they are raking money in like no other company really at this point. This last quarter was the second best quarter ever. And had China not been written off and not been allowed to sell in China, they would have beaten the highest one.
Sure.
Okay. So this is pretty amazing to have, 20 to 25 billion a quarter of operating cash flow.
Yeah.
You can do a lot of fun things with that. And
they are.
They are.
Yeah.
And even after that, if we factor out capex, you get free cash flow. You're still in this range. And the reason it's so high for Nvidia is they don't really have a whole lot of capex, relatively speaking, because they're not building production plants.
Right.
Right. They're relying on partners to do that.
I'm sure I should know this, but if you buy another company, is that capex or is that something else?
No, it would go on your balance sheet, and just as assets, and to the extent you paid more than the carrying value of those assets, it's goodwill.
Okay.
It all goes on the balance sheet.
All right.
Yeah. I like these charts. This is a cumulative cash flow. I do this for Tesla.
Yeah.
Cumulative cash flow here over this period since 2014 is $180 billion.
And next year they might do that in 1 year.
That's right. That's right. Yeah. Fairly soon. Yeah. What do they do with that? Well, they've been repurchasing stock and paying dividends.
Yeah.
The blue line is the combination of repurchases and dividends. Most of that is repurchases. And then the red line here is stock-based compensation. So they're retiring more shares than they're issuing.
Okay.
Right. The share count is coming down.
Yeah. Okay.
So earnings per share then is actually growing faster than the actual earnings of the business because the number of shares is going down.
Right.
Okay. So that certainly helps as well in terms of the stock price. Okay. Let's look at valuation. This is enterprise value, which is a combination of the stock market or the stock market capitalization of the company plus the debt of the company. Now, in NVIDIA's case, they don't have much debt. So you can consider this just the market cap of the company.
Okay.
Okay. Relative to EBIT, earnings before interest and taxes. So this is EBIT would be a little higher than if you just look at the earnings number because that's after taxes, obviously.
Right.
Okay. But anyway, this is consistent across this chart. So that red bar was when we were looking at those other periods. At that point in time, from when the revenue 18x and operating earnings 36x, the stock was trading at 55 times earnings. And if you didn't have the benefit, Randy, of looking ahead after this red bar, you could have easily concluded that NVIDIA was an expensive company. Right? Now imagine that you can't see half of the screen, that the right side is concealed.
Yeah.
Right. Now, of course, it's only gotten more expensive at times.
Right.
Okay. And of course, we now know what's happened to the stock price since this.
Yes.
Right. What I like to do is because we now live in the present, we're over here where the stock is currently at 41 times last 12 months EBIT. what did we effectively pay for the stock back then
Yeah,
based on the earnings the company is producing today?
exactly.
And I've invented a new term that I call hindsight PE, right? We have the benefit of hindsight now because we live in the present. We know what that future turned out to be.
Right.
We can now look back and say, okay, if on this day I was looking at the stock thinking it was expensive, was it really expensive?
Yeah.
What do you think the PE was back here, Randy, based on today's earnings?
3.
1.3.
1.3.
You
Because
could have bought,
we've done this on Tesla, and
yeah,
it's a similar kind of deal. Yeah.
yeah. And this is why I like to sort of point out that PE is such a ridiculous thing because it's just looking at near-term earnings.
Yeah. Yeah.
And with a company that 36x's operating earnings, you can imagine PE in the next 12 months really isn't that relevant if you have that
Yeah.
kind of growth.
Yeah. Yeah.
And this shows that. So right now the stock is trading at about 35, 36 times current earnings annualized. And if you go back in time, because the earnings have grown so much, this PE back here is 1.3 times the last 12 months earnings that we have today.
Right. Right.
Right. Now, no one uses this measure. No one looks at
No.
this. You
No.
will never see anybody on Wall Street talk about anything like this.
Right.
But for me, it gives nice perspective on terms of, okay, if you bought this stock 5 years ago, what did you actually end up paying for this year's earnings? And it was only 1.3 times.
Mm-hmm.
Right. And if you thought it was expensive back then, you were wrong. It
It's
was
like
cheap.
it's about the PE that you would expect to pay for what do they call it, a personal, like your business. It's you're in the business of helping people with their financial stuff, but it's very personal.
Yeah.
Without you, it's like,
Right.
and so usually you think in terms of 1 year's sales,
Yeah.
maybe 1 year's profits or 2 years profits, but not some of these other PEs. Yeah.
Yeah. If there's a company that's based on a personality, then there's no value in the company if that personality leaves.
Right.
Yeah. Yeah. So that's just interesting. And of course, if you go back far enough, you could have bought the company at,
Right.
0.01
Right. Yes.
times earnings.
Yep.
Now, that would have taken a 10-year viewpoint, but still, that's actually interesting to say, okay, I think this company can grow for a decade. I'm going to hold my nose and buy it today, right? See how it does. Well, that would have been the buy of the century right there.
Well, and also back in Nvidia, for all intents and purposes, it was only Jensen that was and I don't know that he was predicting this much of an increase.
No.
But when you talk about Tesla, you've got Elon Musk with a massive history of success.
Yeah.
You've you've got Cathie Wood and you've got Ron Barrett. Other than that, I don't know. You think any smart people are predicting this kind of a future for Tesla?
Well, there's a Cern basher guy out there with
Yeah, well,
crazy
that's
numbers.
true. I forgot about Cern and Randy. Yeah, yeah,
Yeah. Yeah. Yeah, there's a few of us, right? And again, I think that NVIDIA is a nice sort of precursor to what is likely or could possibly happen with Tesla.
right.
And certainly Elon's compensation plan kind of requires that he 36x the earnings of the company,
Right.
right? Will it be over the short period of time? It remains to be seen, but it could be.
Mm-hmm.
And certainly within 10 years. Yep. Okay, so one of the things with NVIDIA that everybody was worried about was their inventory growth. And if you look at this chart by itself, you would have reason to believe that there could be a problem here, right? Inventory, just, a year ago, I guess you could say, was under 8 billion.
Mm-hmm.
And now we're knocking on the door of 20.
Mm-hmm.
So what can cause inventory to grow? Well, one reason is that you've built stuff and it's not selling.
Right. Yes.
Piling up in the back office. In Jensen's office, he's got GPUs stacked up
Yeah.
behind his desk.
Yeah.
Right? The warehouse is full, and he's like, okay, just stick them in my office. Fine. Or the other reason is that the company is preparing to sell even more. So they're building these systems, right? And they're in various stages of production, and the inventory is expanding, and it's a precursor to future sales.
Right.
Which one do you think it might be for NVIDIA, Randy?
Well, as far as I know, everything that I've been told is that they're selling everything they can make. And so if you're selling everything that you can make and you have that much free cash flow and that much money in the bank, you would tend, I think, to start worrying a little. And your margins are that high. You would tend to start caring a little bit less about turnover, which is a thing that as a wholesaler manufacturer in my lifetime, I was very interested in turnover. How many times a year am I turning my inventory? Well, that was because the margins were, something on the order of say 25 to 30%, and there wasn't that much money in the bank. So yes, you can say, okay, I'm willing to take a little less turnover. I want to have a safety inventory because I can sell all I can make.
So with revenue of about 60 billion in the quarter and inventory at 20, so the turnover in the quarter is 3 times. Is
Yeah,
that one way to look at it?
that'd be one way to look at it.
Yeah.
Or you could look at it in terms of what the cost of those revenues were. So the cost of those revenues would be 25% of the 6 billion. That would be 1.5 billion, right? No, I'm sorry, 15 billion. 15 billion.
Yeah.
So it'd be 15 billion. And so then you're still only looking at a little more than a quarter's worth of inventory. So you're still turning, let's say,
Yeah.
3 times a year, which would be fine.
Sure.
Yeah.
And another way to kind of shortcut this in terms of the health of inventory is to compare, well, I guess what I did, is revenue to inventory ratio,
Mm-hmm.
right? And so this is that chart.
Okay.
And so if you look at this, you say, well, this quarter doesn't seem to be an outlier,
Yeah.
right? If this suddenly had plummeted like it did back here,
Right.
then you might say, okay, there's some problem going on here. But this, it's trending down a smidge, but it's consistent with where the company's been for the
Oh,
last 10 years.
yeah. Yeah.
Okay. Um, the company also said that, inventory was up, 19.8 billion, up from 15 billion sequentially, and total supply related commitments were 50 billion.
Mm-hmm.
All right. They're spending a serious amount of money.
Mm-hmm.
We are ordering to secure long lead time components,
Mm-hmm.
meet the demand for Blackwell, and support future architecture ramps. So they're telling us, if they're to be believed,
Right.
that these all seem like good things to me,
Mm-hmm. Mm-hmm.
right? You want to secure long lead time components. You don't want to be caught short not having a critical component. Go ahead and pay for it up front now, get that supply. Tesla does that with batteries and other things that go in their vehicles.
Yep. Yep.
Right.
As Elon says, when you've got 10,000 parts, it only takes one part to completely
Yeah,
shut down the line.
that's right. And then courtesy of AJ again, digging this a little bit deeper, you can look at inventory and you can break it down into raw materials, work in progress, and finished goods.
Mm-hmm.
Okay, now it's a little hard to see with this color scheme, but the finished goods is the darker line,
Mm-hmm.
and the inventory of that actually went down.
Mm-hmm.
So that does not lend credence to the idea that inventory of products that are finished are stacking up. They
Right.
actually reduce that.
Right.
And then the inventory of work in progress of this lighter line, and that shot up a lot.
Mm-hmm.
So again, they're building a lot of these systems.
Mm-hmm.
It's going through inventory, and then next quarter, next few quarters, it'll be sold. And then raw materials, well, you can see that they've also been spending more on that. Again, securing supply of certain things.
And then you get into all the bookkeeping nonsense like we've gotten into with the energy storage units, is that if Elon wants to put 100,000 into the next build at Memphis, and it isn't built yet, but he's going to want them next Thursday.
Yeah.
You could end up having 100,000 sitting on your floor or nearly completed, or maybe on trucks on the way. But when do you count it? When do you count it as sold? So that's a bookkeeping issue. Do you count it as sold when it leaves the warehouse? Do you count it as sold when it gets to the destination and is signed off? At what point is it a sale? So you could end up having a lot of work in progress.
Yes.
Right.
That's right. Yep. Good point. Now, to your earlier comment about turnover, so you can look at inventories in terms of inventory days outstanding,
Yeah.
number of days. And so right now they're at about 100 days.
Mm-hmm.
Okay. It's been higher, it's been lower.
Yeah.
This doesn't immediately look to me like a problem.
Right.
These other things back here look like more issues than what we're seeing here. Right. And of course, in any business, you should expect fluctuations in some of these things. This stuff happens.
100%.
Right. pandemics and all kinds of stuff happens. And then you can look at days payable outstanding. Okay.
Yep.
So how long does it take the company to pay its suppliers?
Right.
And there's no real massive change here. It's fluctuating between, call it 30 and 60 days.
Mhm.
Okay. So pretty good. They're not extending payments or anything like that.
Right.
And then days sales outstanding. How long does it take to collect from customers?
Yeah.
In this case, about 50 days.
Mm.
Okay. Now the question is, why isn't this quicker? Well, one of the reasons is that Nvidia sells through resellers.
Mm.
So those guys have to take revenue. Then they have to turn around and figure out how much they owe Nvidia. So it just takes some time sometimes.
Yeah.
Now, when Elon buys from Nvidia, he's buying direct.
Yeah.
And that was one of the big announcements this quarter is now OpenAI has a direct account with Nvidia.
Mm.
All right. So those kinds of relationships, I would imagine, probably pay quicker.
Maybe, maybe not.
Maybe not. Maybe they get better terms.
When you're talking about this size of, as I was dealing with a small wholesaler, they might have had 2% net 30, 2% 10 net 30. But when I was dealing with Target was like, no, we have to have 60 days.
Yeah.
So, you get different, the larger the customer, the more you usually have to extend terms.
Yeah. So all those dynamics, right? The customer mix changing, the speed of growth, the issues that you have in terms of securing supply and building out ahead of time, all that factors in.
But if you're looking, as you're pointing out, if you're looking at the trend lines on all of these are fine.
Yeah. And you can put all three of these together and you get what's called a cash conversion cycle.
Okay. Yeah.
And that's, 100 days.
Okay.
Again, not inconsistent with where the company was.
No.
It has been over time.
100 days is great.
Yeah. Now, maybe you could look at this and say, yeah, the trend is increasing a smidge. Okay.
Yeah.
It's not crazy, not terrible.
Right.
And frankly, with a company like Nvidia, they can extend, they can give their customers more time to pay, for example.
Sure.
That's not a bad thing.
Mm-hmm.
That's one thing maybe customers appreciate, right? By the way, Dell Computer for years used to have a negative cash conversion cycle.
Yeah.
So the faster they grew, the more cash they had, and they earned interest on that cash. So that was kind of a beautiful feature of that company for a long time.
I've done this.
Yeah. Beautiful thing.
If you can get 60-day terms and you can collect in 30,
yeah,
and your inventory turns fast, then you can get in that situation.
That's right. Yep. All right. This next chart, I guess, was a little bit out of order. We discussed this already. This is stock repurchases versus dividends paid. Nvidia pays a pittance for a dividend, but I suppose just enough to get included by dividend-focused funds.
Okay. Yeah.
Dividend growth has been, I think, pretty decent.
It's 2 cents, right?
It's pretty small. Yeah. Yeah, I think that's something like that. But you can see the stock repurchases have been enormous. They fluctuate quarter to quarter, but overall the trend is up, and this is over 14 billion here in the last quarter.
Yeah.
Right. Pretty astonishing.
Truly.
But that said, despite all that return of cash, their cash on the balance sheet is around 60 billion. Right. So a pretty healthy chunk of change.
Probably handle a difficult day, they were into weather problems or something.
I think they could have lost at least a week, Randy, if there were problems. Yeah. And unlike a lot of companies like Tesla, which is capex heavy, and also some of their customers like Microsoft and Google and so on, they're not spending a whole lot on capex yet. Anyway, at least Nvidia has not gone down that path.
Mm-hmm.
And it's interesting that if Tesla goes down the path of making their own chips, will that force Nvidia to do the same one day?
Yeah, possibly.
And that's a question I haven't really heard much discussion on yet.
No.
I would imagine that Jensen wouldn't be too excited about that, but he may also be thinking along those terms. If he's smart, I suppose he would just get Elon to build it for him.
Yeah, probably. That would be.
Yeah.
Or get TSMC or Samsung to build them for him. I mean, literally, I think that's what I don't know. This facility that Tesla's doing with Samsung, it's not being called a partnership, but they're buying 100% of the production. So I'm wondering if there's a part of the deal is kind of a shared scheme of some kind.
Could be.
Like Panasonic in Reno.
Yeah. No, we're not privy to all the details. Okay, so that's a snapshot of where NVIDIA's been visually.
Right.
Let's talk a little bit about where they might be going.
Okay.
And here I'm going to draw on some of the slides that Jensen's already shared.
Okay.
The first thing he's talked about is essentially the capex spend in data centers.
Mm-hmm.
Cloud CSP is cloud service providers.
Right.
So think of AWS, Amazon, Google, Azure, Microsoft. So they're showing capex here in 2025 about 443 billion. And this is, by the way, the spending by Amazon, CoreWeave, Google, Meta, Microsoft, and Oracle. So just 6 companies.
Okay.
Okay. And next year that's projected to go to 550 billion and then call it 650 billion in 2027. So 100 billion basically increase every year.
Yeah.
Okay. Now the biggest jump may be from last year to this year, although, when you make projections about the future, you tend to be maybe a little conservative.
Yeah.
So we could see bigger numbers yet. Okay. So that's one thing. And so Jensen's talked about in the data centers, even without AI, that this concept of accelerated computing using GPUs actually makes the data centers better, faster, cheaper, et cetera.
Right.
So he's talking about replacing all the CPUs in data centers with GPU-based systems.
Mm-hmm.
It's not quite that simple, but basically, let's call it the trillion that we've spent on data centers needs to be rewired with GPUs.
Mm-hmm.
So there's another trillion or two spent there.
Mm-hmm.
Okay. Here's kind of a diagram of it. So the trends with general purpose computing is going down, accelerated computing is going up, and then on top of that S curve, you've got AI.
Yeah.
Right? A whole new business opportunity. Right? So it's not just that, Microsoft's going to stop spending because AI is a bubble.
Mm-hmm.
Well, this is still a trend in place here. It's massive.
Mm-hmm.
Okay. And then he gave us a sort of a look at their orders, so to speak. So for the previous architecture, the H100s, H200s, et cetera, Hopper, they sold 4 million GPUs and they earned about 100 billion in revenue. Okay. This new architecture, 25 and calendar year 2026, Blackwell Rubin, so far, they've shipped 6 million GPUs. And they have an order book for up to 20 million, and it's about $500 billion plus.
Hmm.
So it's 5x the amount that they had before.
Mm-hmm.
Okay. And he talks about being driven by 2 exponentials that we just talked about, the data center replacement and AI. Okay. And again, I think this is probably a conservative number.
Right. Right.
By the time we're done, this could be 750 billion. Just for this generation.
Sure. Sure.
Okay. All right. Elon talks about Tesla's AI 4 chip and AI 5 and AI 6 being on a kind of a 1-year design cadence.
Mm-hmm.
Well, Nvidia tries to do that as well.
Mm-hmm.
Although major architecture changes are kind of every 2 years, but then they make an improvement on the odd year. So they went from Volta, Blackwell, Rubin, Feynman, the architectures. Another thing that's a growth opportunity is they partnered now with Nokia, which, by the way, is still around. Not so much as a cell phone company, a handset company, but more of a cell phone network, 5G kind of network company. And NVIDIA has partnered with them to basically put GPUs into the telephone system architecture, and basically a 6G network will be AI powered.
Mm-hmm.
So I don't know how big of a revenue opportunity that is, but it seems to me that's pretty huge.
Could be. Yeah. Yeah.
Right? Quantum computing. It turns out that if you combine quantum computers with GPUs and CPUs connected by NVIDIA's NVLink systems, that makes quantum computers that much better. And I'm not going to get into the technicals of this, but it's quite fascinating.
Mm-hmm.
Quantum computing is quite unstable, and it looks like pairing them with GPUs makes them a lot more stable, a lot more useful.
Mm-hmm.
And if that's the case, then NVIDIA stumbled upon a whole new opportunity.
Yeah.
That one day will be quite large. Okay. They announced seven partnerships with the Department of Energy to build seven new AI supercomputers. So just in terms of, building massive computing systems, NVIDIA is at the forefront of that.
And I guess we've got 2 days ago, we got the announcement, 3 days ago, we got the announcement of what that's really going to be, which is Genesis,
Yeah.
where they want to combine all of the science
Yeah.
that there's ever that the United States and the world was willing to contribute into one model.
Yeah. So no doubt for NVIDIA, this is a huge opportunity long term.
Yes.
Okay. And then he's talking about how basically everything gets converted to AI compute,
Mm-hmm.
right? Every single device,
Right.
whether it's your phone, your car, everything, right?
Tractor.
Your watch, probably absolutely everything with any compute in it is probably going to be converted to an AI computing
Right.
device.
Right. And especially everything that moves.
Yeah.
So every kind of truck, tractor, harvester. I mean, just go to forklifts.
Yeah.
All,
So right now we think of AI as these, large language models. There's also
yeah.
different versions of that, different things, right? Different types of models for all kinds of different applications, right? We think of LLMs as chatbots, but of course we're going to put them in robots and cars and all kinds of other things,
Mhm.
right? To power all this, we need AI factories, massive, massive data centers to power all of it. We need chips then on the end devices. And this is where the opportunity may be for Tesla. Tesla has AI4, AI5, AI6, which is custom purpose-built chips that are more efficient and so on for the special purpose that Tesla has.
Mhm.
And that may be an opportunity for them to sell to other customers at some point,
Mhm.
right? So what we're just talking about here is this a complete rewrite of computing across the board, everything.
Mhm.
The old stuff gets replaced, and then on top of that, we layer on all these new things that we just talked about, 6G networks, quantum computing, and all this other stuff.
And we haven't really gotten to one of the most massive, which is that every military in the world will need to be AI capable.
Yeah.
If they're not, then they're automatically going to lose. I mean, we've seen even with Ukraine and Russia, the drones are now AI, 100% AI driven.
Yeah.
Well, I shouldn't say 100%, but largely AI driven.
Actually,
And if you're going to try to take a drone that requires transmission of data from the ground in order to execute against a drone that has been AI ready and doesn't require any kind of communication. The first drone's dead. I mean, it doesn't have a chance.
yeah. No, I think you're right. And I think there's so many other applications. One of the things, too, that Jensen's talked about is if we're going to reshore manufacturing,
Mhm.
what you want to do first is build a digital twin of the factory,
Yeah.
right? And you can design and test it there before you go build a real thing. And so it speeds up the process of perhaps designing and even building these factories.
Mhm. Mhm.
That's one thing. And then, of course, you've got companies like Palantir that are putting AI into enterprises.
Right.
Talked about robotics. We talked about the 6G networks. Talked about quantum and then AI in general. So there's more than what we've talked about and what we're showing here. But I think the message I want to get across to the extent I can is that AI is going to be infused everywhere.
Everywhere.
So the idea for me that we're in an AI bubble right now is utterly ridiculous. And the analogy that I've used is that, we've just electrified streetlights, and people are saying now what use for electricity is there?
What other use? Yeah.
Right. And we haven't put it in homes or businesses or
Yeah. Yeah.
government facilities yet, but all
Yeah.
the streetlights are lit.
Yeah.
And it's like, okay, we can see now in the dark. That's enough. That's good. We're done. No, we're just getting started. And the fact too that a lot of people say, well, these large language models aren't very good. This AI thing sucks.
Mhm.
Well, that's again another sign that we're not there yet. Like we still have a lot of development to do. The models need to be bigger, more training. There's some doubt about whether just scaling AI is the answer, and some people are looking at other ways of doing that, and that's great.
Mhm.
But it's probably a combination of scaling and efficiency somewhere.
Was watching moonshots the other day, and they were saying that you're now able, you can go into an MRI, and the MRI can actually read or absorb the brain waves, and those brain waves can be turned into trainable data for the large language models.
Interesting. Yeah.
That's
Yeah.
pretty crazy.
Yeah. So yeah, I think we're on the cusp of something. If it's an AI bubble, then we're just in the stage where the bubble's starting to inflate.
Right.
A long way to go yet. So Randy, those are my thoughts on a
Those
little
are your
company
thoughts
called
on
Nvidia.
Okay. Yeah. So the crazy thing is Nvidia is trading for 180. I don't know what it ended up today, but it was 180 yesterday. It seems, as you pointed out, was it 40 times
40-ish. Yeah.
40-ish,
Yeah.
50 times future. Yeah, 50 times future. No, be less on the
30 something times future.
30 times future.
Yeah.
And it just seems I haven't made an investment yet. You have, of course. It just seems like if there was another company like Tesla where the future earnings are, pretty clear. I mean, in Nvidia's case, they're actually making the equipment. They're not at the Optimus stage where
Yeah.
they haven't shown the first, real product. It just seems crazy what they're about to do.
For all those people out there that say, "Oh, I'm tired of waiting for Tesla," promises, when's this going to happen? Well, Nvidia is that company that's delivering and executing now.
Yeah.
And of course, you've got people on the other side saying, "Well, this can't possibly continue. It's too good to be true." Right? Nvidia is going to, they're going to have a downturn at some point. It's a bubble. It's not going to last.
Yeah.
So just remember that, Tesla investors, when Tesla's doing well, you're going to have a chorus of people saying this can't continue.
Right.
Right? They have 20 million robotaxis. That's it. There's going to be no more.
And we also don't know what Jensen has up his sleeve.
Yeah.
Because this is all we're looking at right now is what Jensen has revealed. And yes, if you hear that Google is going to start selling their TPUs to Meta, was it Meta? Yeah. If you hear that Elon is going to maybe make his own chip plant, yeah, those are things that you go, oh, see, eventually this is going to start interfering with profits and interfering with revenues. But we don't really know because Jensen has said 90% of the future is in the edge case. It's in the inference chips.
Yeah.
If 90% is in inference, we haven't even started.
That's right.
Yeah, not even close. Yeah.
Until we have a world without software, until we have a world where everything on your device is created by AI on the fly.
Right.
But we're not close to being through this bubble, so to speak. We're in the build stage of the bubble at this point.
Yeah. So then if I was thinking about all of these things, if I really, I watched the video, I'm like, well, yeah, I care about what's happening in AI. I care about what's happening to NVIDIA. I care about what Tesla's doing with regard to AI. They call themselves an AI company now, and they're considered to be the leading, by far, not even close, company in real world AI. Then if I really wanted to get invested in some ways, both financially invested, but also invested in terms of my own personal career, my own personal use cases, there is a book that they might read.
Yeah. Is that book above your left shoulder?
Yeah, oh, that one. And I dare anybody to point to a book right now that is more comprehensive, that is more up to date, that is more futuristic, actually, even future looking, because we have the number 6 futurist in the world, Brian Wang is one of the writers, and his futurism is largely around AI and putting data centers in space. I consider myself to be a futurist too. The chapters I wrote have a lot of future expectations of what I think is going to happen in the future. And then we have the lead-off chapter is Cern Basher, who pulls it all together and says, "This is the future."
Yeah, I wouldn't build up my chapter too much. I played a small part in the book. I'm more focused on the past and the present, I suppose, as opposed to the future in this case. But
No, you have
yeah,
to.
no,
The past and the present are critical
yes,
to understanding the future. And so definitely, yeah, I put your chapter number one for a reason, sir.
there you go. You got to lead off strong, Randy.
Got to lead off strong. All right. Well, yet any last words of advice or caution?
Um, be thoughtful. Um, have the courage of your conviction, I guess is what I would say. I feel like right now we get sort of swayed by the narrative.
Mm.
And the media, for all of its problems, still does a pretty darn good job of throwing out narratives, some of which could be true, but most of them are not.
Right.
So you have to be very discerning, Randy.
Discerning.
Yeah.
Discerning. Okay. All right. Well, see,
Sorry to end it there. That's a bad way to
well,
end.
I said that when we first in the green room, I said I didn't have any CERN or Basher jokes today, but you helped me out.
There's many more where that came from.
Thank you as always, CERN, for coming on. And to all of you out there, have a great AI day.
Thanks, Randy.